I'm so excited about this, man. I think if we can get these trainings going and then get you guys out there doing them for realtors, I just think there's so much value in it. Giving yourself an opportunity to get in front of these real estate offices. In my experience, the realtors are far more excited to come and learn than you would ever expect, especially the good ones. And so if you're not already doing this, I just cannot recommend it enough. And if you teach them things, they will think you're awesome. Like, it's very simple, right? If you teach it to them in a relatable way and you're excited about the material, it just goes so far. And so it's been great experience for me personally. I've traveled around all over the country now with some of the groups here to do realtor trainings. I've certainly done a lot here in Charleston. I find it to be incredibly rewarding and really good about helping us get business. So keep going on that. All right, guys, I'm going to turn it over. Thank you guys for being here on time. For everyone who's late, it's because they failed to prepare. And so going back to yesterday's player versus victim training, have some fun with that, guys. Don't hold on to those concepts. Again, it's big for me. And so I will also say this. I usually send out a video to go along with this. Some of my training material yesterday I stole from a guy named Fred Kaufman. He did a LinkedIn learning presentation called Player versus Victim. If you Google it, it'll pop up on YouTube. It's one of the best 15-minute TED Talk style things I've ever seen.
It's short.
It's tremendously worth it if you want to pick up on any more of that player versus victim stuff we did yesterday. All right, guys. So without any further ado, I will pass it over to Brett. Just so you guys know, anybody who doesn't know this, Brett and I have been working together since 2006. We started companies together and branches together, and we've been on this journey together for a long time. Nobody in my career has been more obsessed with learning how to do guidelines and different programs and willing to figure things out and dive into the difficult stuff more than Brett. And so the fact that he was willing to do this for us today is super exciting, and I'm sure he will make sure that we all learn a lot. Brett, turn it over to you.
Thank you for the introduction. You failed to mention I was the best man in your wedding too, regrettably.
That's also true. Yeah,
Yes.
And you did an amazing job with that. Thank you.
Guys, welcome. What's good? Before we get into the presentation, want to take a quick second to go into why I chose this topic, and it has to do with a couple of different themes that Mark goes over in training with us every week. So I'm going to ask the group real quick, not what are the topics that Mark covers, but what are the two main themes that all of the topics are driving at every day, every week, every month? Anyone want to take a shot at one of those themes?
Oh, no.
Is that Fred Lom?
I had to do it. You do it on every training. Sorry, guys. I'm done.
Fair enough. You want to answer? No.
Fred's been coming to trainings for 5 years. He has no idea what the themes are.
Creating value.
There you go. That's number one. Value. We have to create value. Great job. What's another theme that we go over every day?
Prospecting.
Yes. Oh my God. Prospecting. So the most important things that we can do every day are time blocking, being on purpose loan officers, not on accident loan officers, prospecting, and inside of that prospecting, bringing value. So I thought about when's the last time we did a really good job of that. And I remembered back during the late summer, early fall, we were on calls every day talking about 2-1 buy downs. And I thought it was hysterical. We became the buy down company in social media because everyone knew when we were calling after a few months, it was to tell them about the 2-1 buy downs. So I said, well, what else could we possibly do here? What other value could we create while prospecting every day? And I came up with the dreaded Homestyle renovation loan. And here is why. In today's market where there's limited inventory and houses are coming back with cost to cures on them, this gives us an opportunity to both fix those cost to cures as well as get people looking at houses that they wouldn't normally, creating more opportunity for real estate agents to sell houses. So I'm going to get into my quick presentation. For any of you that know me or have been through an onboarding with me or just any other training, you know that I hate meetings. So you can guarantee bet this will be a quick one. Thank you guys very much for your time. Just give me a minute here. I'm going to share my screen and we are going to do some little bit of learning. All right, can everybody see my screen?
Yes, sir.
Yes.
Awesome. Homestyle renovation. We're going to look at this from a purchase overview. You absolutely can, and they offer a refinance version of this. It is similar, but we are going to today look at this from a purchase overview. The Homestyle renovation mortgage provides a convenient and flexible way for borrowers considering home improvements to make repairs and renovations with a first mortgage rather than a second mortgage, line of credit, or more costly method of financing. What is the loan purpose? We could do a purchase or a rate and term, also known as limited cash out refinance. The types and the terms. They offer a 15 and a 30 year. No 10, no 20, no 25, 15 or 30 year. We must have a DU approval. The property and renovation eligibility includes 1 to 4 unit principal residences, 1 unit second homes, 1 unit investment properties, and that does include condos, PUDs, and the dreaded manufactured home. How do you calculate the LTV and the maximum mortgage amount? For purchase transactions, the LTV ratio is based on the lesser of the purchase price and the cost to renovate, or the as completed after appraised value. The improvements can be up to 75% of the purchase price. On the manufactured side, they're capped at 50,000 or 50% of the price. 50,000 or 50% of the as completed value, excuse me. So let's do a quick example to make sure that you guys are following here. Very simple math, because everyone complains about math. If I'm buying a house for $100,000, I can do up to 75% renovations. So that means I could do a loan for up to $175 and have there be $75,000 worth of renovations on top of the $100,000 purchase price. Do you have to use all of it? No. Can you use more of it? No. The most you can do is the 75%, and that's pretty cool. So on a $200,000 home, you can have up to $150,000 of renovations on top, and it grows from there up to the county limits that you live in. If you're not in an expanded county, that would be up to $726,000. All right. Maximum LTVs. For the 1 unit residence that you're going to live in, 97%. 2 unit principal residence, 85%. 3 and 4 unit residence, 75%. Second homes, 90%. Investment properties, 85%. Very, very, very similar to the LTVs of a standard conforming loan as well. Contractors. The borrower must choose their own contractor. The lender will review the contractor hired by the borrower. They have to fill out a form. We provide the form. The borrowers must also have a contract with their contractor. There's a form for that. We provide the form. It's very easy. Lastly, the plans and specifications must be prepared by a registered, licensed, or certified general contractor, renovation consultant, or architect. The plans and specs should fully describe all the work to be done. While it is not required if the repairs are not over $35,000, I highly recommend a HUD consultant create that SOR, that statement of repairs, and have the contractor kind of sign off on what they're doing. If you've never done one of these, that may not make sense to you. If you have, it does. Basically, the HUD consultant meets with the buyer and says, okay, I want this $100,000 worth of work done. The HUD consultant lays out, this is what it's worth for in materials. This is what it's worth for in labor. And then if you get your own consultant to just sign off on what the HUD consultant does, your own contractor, that is, it's very simple. It could literally take 1 day to get the plans and specs done.
So you recommend going HUD consultant, then back to the contractor with what the HUD consultant recommends?
Correct. The HUD consultant will actually call the contractor and make sure that they're on the same page. But if the contractor just agrees to the HUD consultant's work and the costs and the value of it, then they just are able to sign off on the paperwork. And then you're able to order your appraisal very quickly, because the appraiser is going to need some time to make the appraisal subject to these repairs.
So I just want to walk me through this real quick, like, because so if I'm buying an investment property for $200,000 and I think it needs $50,000 worth of work, 85 LTV is my max. So am I putting 30% down or $30,000 down, or am I putting 37.5 down because it's going to be 85% off of the 250 or 85% off the 200?
It's 85% off the 250.
So my down payment becomes 37,500. The bank then has me owing to 12,500, and then I'm getting 50,000 towards those improvements.
That's correct.
Wonderful. Thank you. Appreciate
Yep.
it.
That's correct.
Brett, I have a question also.
Sure.
So I have a realtor that is looking at a property. Her husband is a licensed contractor. I'm assuming that her husband cannot do the repairs, correct?
No, you can't, unless it's less than $5,000, you can't do the work yourself.
Okay.
Cool.
Thank
Great questions. Mark, Diana, thank you. Those are great questions. Let me move on, and I will sure take some more at the end. Cost and contingencies. The lender can advance up to 50% of the cost of the materials anytime after closing of the loan to secure supplies for the projects. Renovation costs may include labor and materials, architect fees, permits, and licenses, an optional contingency reserve for the unforeseen, a payment reserve up to 6 months if they can't live in the home, and a separate contingency reserve for 2 and 4 unit properties of 10%. What are the allowable improvements? Probably the most fun part of the presentation. Improvements should be permanently affixed to the property or land. Keep in mind, it's property or land. Can purchase appliances as part of an overall remodeling project that includes substantial changes or upgrades to the rooms in which the appliances are placed. May be used to construct various outdoor buildings and structures. Examples of that would be accessory units, garages, rec rooms, and swimming pools. May not be used for a complete and utter teardown, though. Here is the maximum mortgage worksheet. It looks a little bit cumbersome. Up at the top, you've got to fill out, all of the different entities of the file, the costs of things. It calculates your max loan amounts for you. It also at the bottom allows you to add in all of your different fees and escrows so that you can come up with a complete loan worksheet for the buyer. But the most important thing here is coming up with the maximum loan amounts and what they want to do. I also wrote in on this sheet, well, marketing wrote in on this sheet for me. We have this built into Encompass. It's probably one of those things where you have to do show all in alphabetical order, but there is actually a Homestyle tab in Encompass, and it mirrors this sheet. So you're able to input everything into Encompass as well. It's fantastic. Thank you, IT. All right. As a quick look. All right, go ahead.
Sorry.
No, go ahead.
What was the percentage on the contingency reserve?
So the contingency reserve is 10%, and then it could be an additional reserve if it's a multifamily home.
Okay.
So, but Brett, did you say it was optional?
It's going to be at the discretion of the person's assets and the HUD consultant as to how much work is going to be done.
But there's a mandatory reserve. There's an additional optional 15%. Is that what you're saying?
Correct.
Okay.
Hey, Brett, can that be retirement funds?
As long as we can liquidate them, yes.
It's just like any convention. It's just like a conventional file, right? So like the guidelines are the guidelines for the reserves, right? There's no difference.
Yeah, not asset reserves, contingency reserves. The contingency reserves get added to the cost of the construction, correct?
That's correct. They're gonna get financed into the loan as
Right,
part
right.
of whatever you're taking. It's gonna get financed in. It's also gonna finance in the payments for, if they determine that the amount of work you're doing makes the house unlivable for 1 to 6 months, you're gonna factor in the payments as well to live there, or to pay for the house while you're living somewhere else.
If
What
that con-
happens if you don't need
Use-
all that contingency that's put in there anyway?
It's a great question. It goes as a principal write down on the loan. If we don't use it all, you don't get it back in cash. It goes to reduce the loan amount.
Does it change your payment?
No, it's just a principal reduction to the loan. So I will now take a second to plug my referral desk. For those of you that know or forgot or don't know, you are able to send me loans that are out of state, non-QM, down payment assistance, or construction and renovation loans. So your team has the choice of either doing them themselves, taking on the work and all the responsibility, or you can send them over and for reduced compensation, and my team will do them for you.
What's the reduced compensation?
It's 50 basis points.
Cool. And at that point, you're just referring it and then you're done.
That is correct. Thank you.
Dude, you're the best. Questions for Brett?
Let me unshare my screen and I'm back. Sir Fred,
So,
I guess we'll do the wave your hand.
well, I just wanted to just touch with awesome job, by the way. This is, I find a lot of people ask questions about this, but this is different because the first thing realtors want to know is like, oh, 2 or 3K. Like that, they just think the world thinks 2 or 3K is a renovation loan, is the only renovation loan. So there's a lot of things on this that you could tell realtors that this is beneficial to the borrowers other than FHA, which is the investment thing, second home thing. And like, I think FHA, because it's been a while since I did 2 or 3K, but if you know this, I'm sorry to put you on the spot. FHA is very basic with the work that you need to do on the house, right? This program, you can add different things in, right? So that's a massive difference, I would imagine, right? Because FHA, you can't do that for the renovation.
You're correct. Like the 203K doesn't allow like a pool.
Yep.
And it only allows things that are in the house, not outside of the house. So I would agree with you there. So thank you for bringing that up, Fred. We don't offer the 203K here. I know it's on the list to consider. I know that question is coming. Do we offer the 203K? It is on our product list to look at. We have a really good deal with Planet Home where they're going to buy these loans and then from us, and then they're going to handle the draws afterwards. So you guys are going to be able to, whether you close them on your own, or you close them through me, when that loan closes, you guys are going to get paid right away. Then, then Planet Home is going to service that loan for us. They're going to be the one responsible working with the HUD consultant and the contractor to do the different draws, do the title updates, and get that stuff done. We have a great relationship with Planet Home. We have a great rep there. Feel very confident in presenting this product to you that if you sell one and everyone's on board doing what they're supposed to do, it will close. It will absolutely close.
Brett, how much time do you typically give, or when you're guiding a real estate agent and they say, you want to do one of these loans, 60 days, 40, 50, 90, what's been your experience?
So my experience has been that I want to comfortably say 60 days, but I also don't want to put you in a position where you won't win the deal. So, I wouldn't say anything less than 45. What is really important is 2 things. Getting that HUD consultant and the contractor on the same page so that you can order the appraisal quickly is going to save you weeks. That's the difference. Because the appraiser can't do his job until he knows exactly what that house is going to look like and what dollar amounts are being spent to the penny. So, if that could take 2 days or 3 days, or that takes 2 or 3 weeks, I've seen it both ways. That's your difference right there. Other than that, Fred is right. The underwriting to the loan is the same. The same underwriting to the Fannie Mae loan. We have all of the forms, by the way. We have the Planet Home forms for the contractors, for the buyers, all the forms we have in-house here. So it's just simply a matter of getting that SOR complete to the exact amount of repairs that that buyer wants and that HUD consultant is willing to say fits inside of what they qualify for.
Is there data somewhere that, or like a database where we can see what contractors have worked with the HUD consultants before in our areas, or is there anywhere because like I would think if you can go out and partner with some marketing with some contractors in your area that are familiar with the program and have done it, it seems like there's a huge opportunity there to do some referral stuff and work together on some of those things.
Yeah, I think that is a great point. So the HUD consultant cannot recommend a contractor. That's unfortunately against their rules and regs they got to follow. But let me tell you what you asked that makes a lot of sense. There is a website that by state lists all of the HUD consultants that are currently licensed. There's probably about 10 or 15 in every state. I do recommend that people get to know the HUD consultants, call out to them, reach out to them, see, what areas of their state that they cover, if not the whole state. And then work that way. Generally, the people that do these loans have a contractor in mind. So it's just a matter of getting that contractor and HUD consultant on the same page. But there is a website that specifically lists all of the consultants and their information.
So, and if I'm a loan officer and I want to do some different kind of prospecting, calling around to contractors in the area and seeing if they've done these loans before, if they know about it, maybe doing presentations for them. So if they run into somebody who wants to do work and doesn't have the money for it, whether it's for a refinance or a purchase, that might be a good thing to start to build up your business if you're struggling right now. Because a lot more people are going to do renovations right now to stay in their home than they're going to be in a rush to go buy a new home based on what's going on in the market right now. So there's potentially opportunity in this space.
Yeah, I think I would agree. I think that there's a ton of opportunity in homes that people just don't buy because they think, oh, this is messed up, that's messed up, it's going to cost so much to repair. They're just not aware of the fact they could do a renovation loan and virtually get all of it covered by the renovation loan. I don't know about all of you, but I've had some recent appraisals come back with some cost to cures on them. And if it's not a very easy, fix the paint, then I'm suggesting renovation loans. Oh my God, you need 20K repairs. Let's turn this into a renovation loan. If the seller's on board to wait, let's just flip this to a renovation loan and go that route. So I think there's a lot of opportunity. And obviously if you're refinancing and the opportunity is there as well, especially if you're looking to do some major additions where it might make sense to leave your 3.25 rate for a 6.25 rate, but you've added $200,000 or $300,000 onto your house. There's a ton of opportunity. I could talk for hours on it, which I'm not because I have my own rules about length of meetings, but I do want to turn it over to you guys one last time for any questions. I do love and appreciate them.
Looks like Dean and Paige have their hands up. So Dean, go ahead.
So you said if the renovations are less than 35,000, the HUD consultant wasn't needed. It's kind of like the FHA 203K, the streamline and the standard. Is that basically kind of the rules we're following?
Yes.
You recommend the HUD consultant no matter what, right?
I do, because someone's got to go out and make sure that the work is done properly. Someone's got to agree with the contractor on prices. The HUD consultant is making sure that the customer is not being ripped off. There's a lot of value in that HUD consultant, and I will forward out to you guys what on a recent reno loan what a HUD consultant did, so that you can see the in-depth work, because it will blow your mind. Once you see this, you will definitely want a HUD consultant. What was that, Dean? I'm sorry.
What are their costs? They usually charge like $1,000 or something.
That's a great question. So the most they could charge is $1,000 if the work was $100,000. It's basically $100 for every $10,000 worth of work. So if it's like a $50,000 job, it's $500. If it's a $100,000 job, it's 1,000. It caps off at 1,000.
Yeah, I would say from your protecting your client's perspective, that's always going to make sense. It's going to allow them to negotiate with the contractor. It's also going to listen. One of the things that's really dangerous about this is if you can spend a bunch of money doing improvements that don't improve the value of your home. And so what you don't want to have is people ending up underwater in these situations, especially as we enter what's potentially a slightly declining market. So you want to make sure that the improvements that people are making, if they're borrowing this extra money, are going to be the kind that add value to the home, and not just things like that are more cosmetic, that where someone might end up in a situation where they're feeling underwater, unless they're planning on living there forever. Paige.
My question was, the contractor has to be approved. Is that correct, Brett?
Correct.
That's what,
Correct.
right. So it can't just be anybody. We Planet, what is the company that we use? Planet?
Planet, we use 2. Planet Home is 1. The one
they
that we're
have to
focusing in
approve
on.
it.
They do. Well, I mean, anyone's going to, it's the same form. So basically there's going to be a form that goes to the contractor that says, please send us how many years you're in experience, your licenses, and give us a reference or 2 of a job that you've done before. It's a very standard form to get a contractor approved, similar to a construction loan.
So that would behoove us to go out and speak to contractors, already maybe get a couple of them to fill out that form ahead of time. So you're kind of in a better space with people.
Absolutely. And Mark suggested that as well. It really, talking to them, that would only benefit you. I just know that some of the states that people are in, one person might not cover the whole state. Some people are in some real big states here. So, but there's no connection or prospecting that you make that won't benefit you.
Yeah,
Right.
I'm talking about the contractor in specific. And then the other thing was there's a cost. The rate for this is higher. You had told us in our meeting that it's about 50 basis points higher. Is that correct? For the rate?
The adjustment for, it's about 50 basis points higher for the renovation loan.
Okay.
In
Yes.
rate or costs?
In costs.
And then Brett, is there a chance that Planet has a already approved list of contractors that they could send over?
I will certainly ask.
Yeah, that'd be cool. Just because anything gives us a head start on who may be worth reaching out to.
Definitely.
Brett, do you have an expectation management conversation with the contractors at the beginning of the transaction? Like, or just like in your experience, like your best practice, like do you reach out to the contractor and say, look, here's what we're going to need? Like, because I feel like contractors are the ones that gum up the works 9 times out of 10.
I do. I tell them that I appreciate your bids and your quotes. The HUD consultant is not here to babysit you, to work with you. Please work with them. And if the numbers are close, let's move forward with the HUD consultant's numbers. And I also let them know that, we have an expectation to close within 60 or 45 days. I need you to be available or have someone in your office available to fill out forms and make changes on the fly. One of the more frustrating things, I did a construction loan for Josh Purvis's team. The no fault of theirs, but the guy was a one-man shop. So he was in the field all day and didn't answer emails until 7 o'clock at night. Well, that's hard to work with. So I appreciate you bringing it up, setting the expectation of working hand in hand with the HUD consultant, as well as being available for when we need forms filled out and changes made, is priceless.
Brett, I have one more question. So when we, obviously when we do the worksheet and all that, so all we put on there is the initial appraisal, and then will that appraiser have to do a final inspection after all the work has been completed?
Yes, there's a line item that does all the title updates and the draws, and we add in an extra $150 for the final inspection.
How many draws does Planet Home allow?
5.
Do you have to do a repair inspection at each draw? So if you're going to do a 5-draw plan, you got to charge $150 per draw?
Yeah, it's part of the update. They do, yes. So I put for that line item, I put I put $900, I believe, which had included 5 draws as well as a final inspection. And that gets financed in.
Sure.
Great questions.
How long does
Anyone
the
else?
contractor have to complete the work?
9 months.
But you can only finance 6 months worth of payments.
Yeah.
Okay.
And you'll email us the slide, Brett?
I'm gonna you're talking about the loan I had done, so you could see what the
Yeah.
HUD consultant did. Yeah, I will absolutely will. Just, keep in mind that's sensitive to a buyer, so I'm trusting everybody on this call. But
Yeah. Of course.
once you see it, it'll become very fluid when you understand how the guy breaks down each part of the house. What goes to material, what goes to labor. Is this a necessary repair, or is it a like to, or a nice to have, or a have to have? It's very comprehensive, and you'll understand why you want to have that HUD consultant in on every deal. Even if it was $20,000 of repairs, I would have the HUD consultant, because it's worth it.
It's
Right,
200
so-
bucks. It's also $200
Yeah, it's only a couple $100.
Right, can you send that over to Genius Bar first, and we will scrub through it, make sure there's no personal information before we send it out to everybody.
Yes, sir.
Right, you said the buyer can't do the repairs themselves. What if they actually are a contractor? That's what they do for a living.
It's a conflict of interest. You can't do
It
it.
is, okay.
Yeah. Yep.
All right, Brett, awesome job.
Thank
Please
you
rate
very
the training
much.
though, so Brett can get some feedback and not just hear how awesome he is, tell him something he could do better, because that's what it's all about. But I really thought you did an awesome job. If you guys have any other questions on the program or product, or you just want to refer the loans over to Brett's team, hey, you found somebody, but you don't really bother figuring all this out, you just want to go on and move on with your life, you can get that 50 basis points. We are a lot of activity going on, a lot of credit reports, a lot of pre-approvals, loans coming in. Go out there and do the extra work, make the extra connections. I will say this. We do have loan officers here, and I'm not going to embarrass anybody, but who are consistently adding production and doing better year over year. It's possible. When I talk to those people, it's because they are obsessively doing the stuff. And so, if you're feeling down about it all, or it's not working as fast as you want it to, guys, the secret to the game, I swear, is go out and meet 3 to 5 new realtors every week, put them in the system and do the follow-up cadence. That you will find, if you're meeting that many realtors, you will find the people you click with and the loans will come. And so I know you're probably tired of hearing me say it. But again, if you ask yourself in the last 30 days, how many realtors that you've never talked to before have you met and had a conversation with and put into the 13 by 30 system? If you don't have the business you want, that answer should be 20. And that's not an exaggeration, and it's not a crazy number, like just 5 a week, 1 a day. Go out and call real estate signs, call listings that come out, find a way to collide with one new realtor every day. And if you do that consistently, put them into the system, the rest of this will take care of itself. It's doable. Power's in your hands. I appreciate everybody coming out for the training today, and happy selling, everybody. Enjoy your weekend. See you on Monday. Thanks so much.
Great job, Brett.